I spoke with Vance Ginn, president at Ginn Economic Consulting and a former chief economist at the White House's Office of Management and Budget, to learn more about America's battle with inflation.
The Federal Reserve will have one more meeting in December, and we'll see what they do then. But they've been pausing now for 2 meetings in a row. So it's been since July when they raised their target federal funds rate, their overnight lending rate between banks, to 5.25 to 5.5%. There's some expectation that they may increase it one more time in December. But my guess is they'll probably pause. They'll look at what inflation and other things are doing. But I think we're going to see interest rates higher for longer, given how high inflation remains.
Now, what signs will you be looking for to see if maybe anything might change about this outlook?
Well, one will be the CPI inflation, the Consumer Price Index, that inflation report that will come out very soon. We'll look and see what that rate is. The last one was around 3.8%, which is double what their inflation rate is by the Federal Reserve of 2%. So we'll see if that remains high or if it starts to come down some more. Another indication that I really have been looking at is what the Federal Reserve's balance sheet is. It remains around $8 trillion, which is double what it was before the pandemic in February of 2020. So there's a lot of money, a lot of liquidity that's sloshing around that could continue to create inflationary pressures throughout the economy.
People are actually already talking about rate cuts. When do you see that happen?
Well, I think that's going to be longer. I mean, I don't see that until at least the late part of 2024, given that inflation remains so high. I do see that we're having some weaknesses in the labor market, as if you counted out all of the jobs that were revised down by 101,000 just the last couple of months, there were only 49,000 jobs added last month. And so that is showing a lot of weakness in slowing down of the labor market. I think that's going to continue. And so even if we hit a recession, which I think that we will, they're going to have a tough time lowering their interest rate because of the inflationary pressures that are out there. And this is a big conundrum. What will the Federal Reserve do? That I think we need to keep looking at what the data are showing us and ultimately find ways to make sure that they cut their balance sheet, because that is really what will help stifle inflation and get us back on a longer run trend of economic growth and prosperity.
So just one thing before we go here, because I just heard that you think that we will head into recession, while I hear other people still say that maybe it might not necessarily be the case. So can you expand on that, please?
Sure. I think when you're looking at a lot of these measures and manufacturing, you look at some of the industrial numbers that are coming out, you look at the jobs, the labor market and the jobs report and everything else, they're showing a lot of weaknesses that are already happening. And with interest rates being as high as they are, 5.25 to 5.5%, the 10-year rate being above 5% or right around 5% for the first time in 16 years, and mortgage rates being the highest in over 20 years, this is going to reduce a lot of the demand in the economy, and then the supply will fall off as well. And that is where we have larger amount of risks of recession, which I think are coming very soon. So while there are some good top line numbers, we got to look under the surface, and this is an overall weak economy. And so that's the reason why I think we'll be in a recession soon.
All right. Thank you so much, Vance Ginn, for your outlook and for your analysis. I appreciate it.
Thank you. Have a great day.